Uh, how are you seeing markets? Are you overall bullish? And a change of spectacles, I see.
Yeah, I think that's what's helping the markets actually. Since the time I've changed the spectacles, the markets have been in a bull phase. But having
Sure.
said that, I think things are looking pretty bright. The only overhang for India was obviously the runaway crude prices, thanks to what was happening in the GCC. By the way, one more thing I want to point out is I never wear this shirt very lightly with the bull on my chest as such. I think we're in for a good run in the markets. I mean, if this problem gets sorted out, which I think both the parties are now desperate to do it. I mean, you've seen that the US is holding out right now because they want a very good deal on the table. They don't want to go back to the table again after they've done this deal. So I think it's a matter of time before a very clean deal happens, and things will start looking brighter once crude starts coming off. India has been obviously getting hit not only because of the crude prices. We import 5 million barrels a day of crude, so any upsurge in that price really impacts our current account deficit. But we also getting hit on the FPI and FDI becoming almost zero now for us. I think these are the factors that are impacting us. But having said that, look at the results. The quarterly numbers thus far has been very exciting. In fact, the mid caps have been an outlier out here. Even if you normalize the mid cap earnings growth for the stocks that have moved from loss to profit, like a Vodafone and a IndusInd Bank, even despite that, if you remove these guys out, and probably 80% of the market cap has already reported those numbers, the numbers are in the mid 20s. The earnings growth is in the mid 20s. Same holds out for the small cap universe. It's in the early 20s as such. So things are looking pretty decent on the results front. Obviously, the current quarter will be a trying one, given that the crude impact will be felt the most in this quarter, the June quarter I'm talking about. But beyond that, you'll see growth coming back to normal, earnings growth coming back to normal. And that's what the lookout has been. Valuations have been pretty screaming right now for us as such. So I think we're in a very good spot today.
Morning. How sustainable is this rally, given the fact that you have in the short term earnings impact coming in from inflation, cost escalations which are coming in? Q1 is going to be a very muted quarter for many of them, with cost impacting their margins.
Okay, so basically the fact is that Q1, by the way, before I talk about Q1, Q4, if I was to tell you what my analysts were predicting, they were looking at probably around early teens. Before the war started, they were looking at mid to late teens kind of earnings growth happening. Once the war started, we were looking at early teens kind of growth, and the results have really surprised us positively. It's in the mid to late teens kind of earnings growth for the overall index. I'm talking about NSE 500 right now, right? That's a pretty big index to track as such. So it's been a pretty healthy number to which has come out for the current quarter. Before the war, I mean, after the war started, my analysts have been looking at, say, mid single digits kind of earnings growth as such, given that most of the corporates have been absorbing the hike in the raw material prices. That's why they're looking at those kind of numbers. But already quite a few have started passing on these hikes to the raw material hikes that they're seeing to the end consumer. You saw it in the case of autos. You've seen it in the case of oil and gas companies. I think if that continues, this number too also will surprise. But as I've always said, that markets never always discount the future earnings way in advance. So I think this quarter was already discounted when you saw the prices collapsing in the month of May, April and May. I think after that, things are now coming at even keel. So maybe this quarter may just surprise you on the positive side.
From a oil marketing company's point of view, we started with a very muted outlook for them. Now that they have already raised 8 rupees per a liter in the month of May itself, do you think that earnings would improve, or maybe it's going to be a muted year for them, not making much losses, but ending up with maybe a break even at EBITDA level?
So basically, what I was told was that they need another 4 rupees or so, 5 rupees, or probably crude to come back to $92, their basket of crude to come to $92 It's already at 87, $97, $98 as such. So I think if for them to break even, so basically now from a huge amount of loss, we're not seeing those kind of losses going forward, right? So I think that again is going to positively surprise. And if the crude comes off, I won't be too surprised if these guys make money. And mind you, the problem with our, not problem, rather the problem for the consumer is that once these crude prices grow up, retail prices go up, you never see them coming off. You saw that when the last time they raised prices, they never cut prices after the crude fell off to $65. So I think they will have windfall profits if crude comes up below $92, and they'll continue to have these prices as such at the retail level, pump level. So maybe again, as I said, positive surprise may be coming through for these guys too.
Do you buy these, Dinshaw, at this time? Is it a good time?
No, not really. We do not speculate on this, but okay, we have a long short fund, so we were short these names earlier.
Okay.
We cut our shorts after some amount of positive news started coming out from the Gulf region, so that's when we cut our shorts.
Dinshaw, you spoke about the fact that when crude prices were lower, the prices didn't come off. But many of these oil marketing companies in the last 3 to 4 years had aggressive capex plan, deployed most of the profits for capex, and also gave good dividends not just to the shareholders but to the government as well.
Yeah, so I agree. I mean, that's what I said, that I think the government is doing a very prudent thing with these OMCs. Though it's liberalized, I mean, the pricing is supposed to be independent. But the fact is that when the crude goes down, they do not insist on these companies to cut profits. They allow them to make money and obviously deploy it in very productive ways by way of not only giving dividends to the government, which is used to reduce their deficit, but also in terms of the capexes that will help them grow further going forward as such. So I'm okay with what they're doing. Just that not too bullish on this right now.
You're bullish on the street otherwise, Dinshaw, and therefore, what is it that you're liking or you're buying in terms of stock sectors at this point? Of course, your allocations in terms of what the mutual fund owns is on the screen for viewers, but give us a sense of what you're buying.
So basically what we're doing is wherever there have been sharp corrections for no reason, those are the sectors or the stocks that we're picking up. We've seen that in the space of our new age companies. Unnecessary corrections happening, mainly because there was a big overhang of AI, which was being talked about. But then if you look a bit deeper, it's not possible AI to impact these companies as such. So that is one area that we were looking at. Our discretionary area, again, we've been picking up names out there also. We've been adding a couple of new names to our portfolio, but mainly it's in the EMS space as such, where the correction was overdone. We suppose so. That's why I picked up those names as such. And if you ask me about the market cap allocations, when you see our portfolios coming out for the May end, you'll see that our reduction, I mean, there's been a fair bit of reduction in large cap exposure. We've moved into mid and small caps to an extent, that exposure, because as I said, the growth rates from here on will be very exciting in this category rather than in the large cap space. They've done their work. They've done their bit of stabilizing the market per se. And I think beyond this, it's growth which is going to kick in.
What would the sectoral tilt be, Dinshaw? In fact, I was going to ask you on IT, but the last part of that answer tempted me to ask you what's the sectoral tilt within the mid and the small cap basket that you're looking at?
So it's mainly discretionary space, some amount of capex space, EMS comes in the infra space and stuff like that. IT is a totally void for us even today. We don't think the valuation, though they look very attractive at whatever 16, 17 times forward earnings for the large caps. But our belief is that AI is yet to play out fairly badly for these guys, because we expect quite a bit of painful reset for this particular industry. And when I say painful, I'm talking about margin compressions, negative growth rates, if not low growth rates as such. So that way, so that's what we're looking at. So that's why we're avoiding IT as of now.
Okay, Dinshaw, thank you so much for joining us this morning, giving us that perspective, especially the domestic view. So important to contextualize with everything that's happening global, as well as the way in which US markets are playing out. Thank you so much for joining us.
Thank you.